Hello and welcome to FX Street Currency in Play, coming to you from the heart of London. I am Matt Brown. Just want to start off by saying all our friends and colleagues out at FX Street in Barcelona are safe and well, but our thoughts go out to the friends and families of all those affected by the terrible attacks that we saw yesterday. But moving on, I am joined today by Darren Sinden from Pepperstone. How are you today, Darren?
Very well, thank you, Matt. Pleased to be here.
So you're a market analyst at Pepperstone, so we're going to talk through the FX moves that we're seeing at the moment. And starting off, looking at a few of the trends we're seeing. Euro dollar's moved around, a bit of weakness over recent sessions, but has just this morning broken above 117.50. We had the ECB yesterday saying they're starting to be a little bit concerned about the rise in the euro. What's your take on this?
Well, we'll look at that in a bit more detail in a moment. But I think I was surprised that the euro dipped. To be honest, the idea that a stronger euro would be problematic for the ECB is nothing new. I think probably says more about a thin August trading than it does about changing the ultimate trend. As a individual, I'm bullish the euro, and I see it making further highs from here. Maybe not immediately, but over the coming weeks. And again, we'll speak about that momentarily.
Yeah, we'll look at one of your charts you've kindly brought in. Moving on to cable, lower end of the range, around 129. We've had a few technicians on saying this could be in a downtrend. It seems stuck around just below this 130 level. Any views on cable at the moment? Yeah,
well, I think, to be honest, what's been happening in cable in the last week just shows you how the sort of juxtaposition between what the market wants and what's good for the UK economy. The data we saw actually positive for the UK, but negative as far as the market was concerned, because it potentially means that interest rates won't rise, I should say, in the UK anytime soon. And so we've got this two-way pull. You could really say it's down to sentiment. For choice, I would favour cable the sterling rather, to rally against the dollar short term. Maybe not saying too much about cable, but more about continued weakness in the dollar. Another subject that we're going to touch on momentarily.
We'll focus in on that in a bit. That's good. And again, dollar yen seems stuck in this range. We've got the safe haven. It's moving around, but really anchored around this 110 level for the time being. It's
funny you mentioned the 110 level. It was exactly the thought that occurred to me yesterday, and I think the word anchor as well. I would have used exactly that. I think that's a very important point. Again, we'll look at that. It's very coincidental, isn't it? But we're going to look at that in a moment in greater detail. Again, I take a bullish stance, at least as far as the yen's concerned, and think that further yen strength is something that we should get used to the idea of going forward.
So an overall dollar bear. So let's have a look at the slides you've kindly brought in. Starting off with Trump's White House inertia has meant a weak US dollar. The news flow continues to come out of the White House.
Yes, I mean we were always quite surprised when Trump won the US presidential election back in November. None of us were really certain what it would mean for the US. I don't think anybody imagined that we'd be in the situation we are now. US politics is all about forming a consensus, not just once, but on every major issue. And in fact, Mr. Trump has, in the last 210 days, has managed to do exactly the opposite and alienate pretty much every group in America, including his own party, and also some of his own staff. And so now he's looking increasingly isolated. You can see the chart here, the post-election bounce in the dollar index, growing disenchantment, and then we tried to rally again in March, but fell under that dotted blue line, and it's been one-way traffic really ever since. There's a gap there towards the end of April, and it's been lower ever since. And although this chart isn't, it was as of Wednesday's close, you can see high wave candles on the right-hand side around the 94 level, suggesting it's going to reject those high levels, and indeed I believe it has already this morning. So I think there's a palpable sense of concern now in the States. We saw US equity markets sell off yesterday on similar concerns. They've been largely unaffected by what's been going on in the dollar to date. I've written down here, could the Fed plans now be derailed by the instability in Washington? What would happen, for instance, if Gary Cohn, who is Jewish, I believe, by extraction, if he stood aside now from Trump's administration, who would be the leading candidate to take over at the Fed next year? So many potential variables, but net, whilst we've got this uncertainty, the dollar weakens. Don't forget, of course, the budget and the debt ceiling are first things on the agenda when Congress
when they come back,
reconvenes after Labour Day. So very difficult to see what's going to happen there.
Yeah, lots to look forward to there. I mean, there was rumours that Con had stepped down last night, which were, pretty quickly denied, but certainly that could affect, well, we saw yesterday with the S&P, the banks sold off quite aggressively on the back of that. So moving on to the next chart, Euro strength could hinder the ECB and Eurozone. There were the comments that came out of the ECB yesterday, so just some more detail on this chart.
Well, the strength of the euro has been really the main feature, alongside the weakness of the dollar for the 2017 year to date. That has, to some extent, been predicated by an improving Eurozone economy. In the past, we've got used to good, strong numbers coming out of Germany, but we've seen data and better data coming out across the whole of Europe. Even Portuguese unemployment falling to record lows, or recent record lows. There are certain factors around that, but nonetheless, positivity and better data from France yesterday. However, a stronger euro does start to cause a headache for the ECB and for the recovery as a whole. Now, we could have plotted a chart here showing euro PMIs, but I've just used the German DAX as a proxy for European economic growth and plotted that against the euro dollar. You can see that the euro the euro keeps rallying against the dollar, and that's the upward trending blue line. But from the middle of June, the DAX mounts a sharp sell-off. True, it's rallied slightly, but it started to tip down again, and it will have been weaker again this morning on weaker Asian and US markets. The lower the DAX goes, the more of a concern it must be for the ECB, as I say, acting as a proxy for the market's views on European growth. The euro dollar rate could climb to 122 and perhaps even 130, some strategists are saying, post the German elections, which of course are due at the end of September. So September's shaping up to be a very, very interesting month as far as politics and the currency markets are concerned. I think the strength of the euro is probably unstoppable on two grounds. Basically, it can rally or could rally further from here based on European economic performance in the short term. And secondly, as we've already identified, the darkening political situation in Washington DC.
So lots to play for in September for sure. Moving on, we have dollar yen. So if you can just talk us through, or as Japan recovers, so the yen could rise again.
Well, it's not a dissimilar story really to in a way to the story of the euro. We got used to being negative about the Japanese economy, but we're going to have to start changing our views on that. We posted 6 consecutive quarters now of growth in Japan as far as GDP is concerned, and that surprised me. I've been a Japan bear for quite a long time, but you have to sit up and take note and realise that things are changing. You mentioned the idea that the yen has been driven by safe haven flows, and the chart on the left really is just meant to show that that's the case. Here's the period from December into July 2016, and you might recall we had a sharp sell-off in both the equities and currency markets, and the yen strengthened on those safe haven flows. The yen, for people who aren't aware, is always a safe haven currency because it's a reserve currency because of its liquidity, the third most liquid currency in the world. Trillions trade every day, and so we saw the trend there, but that ended in the middle of the summer last year, and risk was very much back on in the market. I should say that the green line in this chart is the US Treasury 10-year bond yield, the classic safe haven instrument, and you can just clearly see the downward trend, and then the market changes mind, but risk on again, and the yen weakens. This time, though, as you mentioned earlier, we're anchored around 110. In fact, I think we've traded down to 109, maybe even briefly below that against the dollar this morning. And I think it's not going to be long before the market comes around to the idea that it's not just a safe haven currency anymore, that there are fundamental and technical reasons for owning the yen and being short the dollar, again, because the dollar's playing into our hands here by weakening. And I think this isn't going to play out immediately, but over the next half a year, perhaps out to March 2018, it wouldn't surprise me at all if we saw a similar pattern there. Risk off, joining up with the idea that it's worth owning the yen in its own.
The fundamentals
absolutely,
speak for themselves. Yes. Brilliant. And finally, just looking ahead at the calendar, a few data points, and certainly if you're trading, dollar CAD maybe, or anything against the CAD, the loonie. But anything jumping out at you there?
sorry to jump in, but I think all Canada data is important at the moment, particularly where housing and inflation are concerned. We're all expecting the Bank of Canada to perhaps move again in October. They tried to walk back a bit from that when they raised rates recently, but if we see a higher inflation number, then I think that puts the pressure back on for them to raise again. Conversely, it may give them a bit of breathing space even if we saw a weaker number. You can never ever discount what an FOMC member will say.
Yes.
It's meant to be yours. They're all meant to be away on holiday or getting ready for Jackson Hole, but they keep popping up to speak, don't they? So always worth paying attention to what they say, and we'll see which side of the fence Mr. Kaplan comes down on in terms of whether it's right to tighten or reduce the balance sheet. There's obviously some discord amongst the members. The FOMC minutes showed the other night. And then the Baker Hughes rig count, always the one to finish the week on.
Yes.
Why this is important, oil prices obviously feed directly off of this, and off of that, expectations about US inflation levels, which again feeds into the Fed. So all roads lead back to the central banks at the minute.
And today, Trump as well, do we think that will move the dollar as well? See what he comes out with, see what he says?
It's getting to the point now where it's almost impossible to predict. If he says something, if he tries to start mending some fences, potentially I suppose we could see some pre-weekend profit taking, a bit of a dollar bounce. But if he stays where he is and makes further statements that leave him further isolated, then I think we see dollar weakness into the close.
On that note, Darren Sinden from Pepperstone, thank you very much for joining us today.
Pleasure.